So, Peter, you gave us a little preview there of why you like Starbucks. I'd love for you to elaborate a little bit on that, because the company announced a major investment in its workforce earlier this year that would chip away at margins a little bit. But you believe that the company also has pricing power. How much and at what cost?
Yes, great. Thanks, and thanks for having me on. Look, we like Starbucks for several reasons. Number one, earnings numbers have already reset significantly lower. They reset after last quarter. Two, the stock has underperformed its peer group, the large cap restaurant peer group, for the majority of this year. And then three, I would tell you that they have pricing power. They cater to a more affluent consumer. Inflation is going to be with us for several years, and they have the ability to raise prices without significant pushback on traffic. The issue for Starbucks hasn't been, lack of sales. It's really been margins, and really last quarter's margins. They made a significant investment in their labor force last quarter, which really dragged their margins by several hundred basis points. They only need about a 4 to 5% menu price increase in North America to fully offset that margin pressure. If you consider what other operators are taking in terms of pricing, McDonald's is running north of 6% on menu pricing. We're seeing that from several other operators. Chipotle was in the high single digits. There's no reason to think that Starbucks can't raise prices by 4 or 5% in the Americas without significant pushback on the traffic side. If they do that, I think you could see the earnings estimates rise again, and we can achieve the pre-pandemic margins that we saw several years ago.
Peter, you also like Chef's Warehouse. The ticker is CHEF. The company caters to high-end restaurants and also consumers, selling them everything from seafood to confectionery products to other types of food. And I'm wondering why you like that company and why you think it will benefit from the period we're in.
Yeah, look, our thesis for 22 is I think you want to be in names that cater to a more affluent consumer that can absorb these price increases. That's what Chef's Warehouse does. They cater to 4- and 5-star restaurants that are raising their prices pretty substantially, but they're not seeing any pushback in terms of that level of price increase. So in our view, for Chef's Warehouse, where the downfall has been over the past couple of years has really been on the case counts in their hospitality division. As mobility increases, travel increases across the country, people get back to some sort of work, conferences are coming back online. I realize we have this new variant that may be putting a little bit of a dent in plans right now. But I think as we get back to more normalized situations with their pricing power, I think you're going to see Chef's Warehouse win in this environment. In addition, they're making significant moves in terms of acquisitions, which I think are going to boost the top line significantly and eventually flow through to the bottom line as well.